Stocks gain on Wall Street led by the tech sector ahead of the release of the inflation data later this week. U.S. President Donald Trump also signed an order to impose a 25% tariff on steel imports to the United States. Stocks in the Asia-Pacific open higher while the gift Nifty is suggesting a lower start for the Indian markets. Gold prices rise to a record high about $22,900 an ounce as U.S. President Donald Trump continues to threaten fresh tariffs. Crude prices rise with Brent rising above $76 a barrel. Apollo Hospital's third-quarter revenue meets expectations, but profit beats estimates as margins improve. Grasson delivers a weak third quarter led by lower profitability in the VSF business. Eicher Motors numbers also miss estimates as margin hits a seven-quarter low. U.S. President Donald Trump's top economic advisor, Kevin Hess, criticizes India's tariff, describing them to be enormously high and restrictive to imports. Speaking to CNBC TV 18, he also said that these tariffs will be a major issue to be addressed when Prime Minister Modi and President Donald Trump meet later this week. Prime Minister Narendra Modi meets French President Macron in Paris ahead of chairing a global AI summit. At a state dinner, Prime Minister also meets U.S. Vice President J.D. Vance. Hello, good morning. You've tuned into CNBC TV 18. You're watching Power Breakfast with me, Vinny Motiwala. A quick look at what the markets are doing this morning. Now, what we have is the Asian market handover. Seems like it's a bit of a positive start that's coming for the Asian markets. Look at the Taiwan index holding on to gains of 0.7%. Hang Seng is managing to hold on to good gains as well. So overall, we've seen that the Asian markets have managed to open on that positive front, given that US markets also and the European markets managed to close on the positive side. When you're looking at it, ASX 200 is also opened on the positive side. Nikkei is also holding on to gains. Shanghai a bit subdued, but most of the Asian markets opening on the positive front. Nifty implied open as of now is indicating a bit of a green start, 26 points uptick. But will that sustain is something that we're watching out for, because yesterday did open on the higher note and then ended up closing. The markets ended up closing on a subdued note, almost at the day's low. But yes, that's how the Asian markets have opened. Indian markets indicating a bit of a positive start for the markets as of now. US markets, let's look at that as well. Wall Street that ended higher with Nasdaq surging almost 1% as traders looked past the US tariff threat from President Donald Trump. We have CNBC's Bertha Coombs who's getting us a wrap on what happened on Wall Street.
U.S. markets were up across the major indexes Monday as investors seemed to shrug off President Trump's threat of 25% tariffs on all steel and aluminum imports. The Dow added 167 points. The S&P 500 was up 40, while the tech-heavy Nasdaq gained 191. Shares of McDonald's were up about 5%, despite disappointing revenue for its fourth quarter. The fast food giant posted weaker than expected sales at U.S. restaurants after an E. coli outbreak early in the quarter dampened customer traffic. The company says traffic has rebounded, but customers were spending less than usual. There was one bright spot, overseas growth, which came in much stronger than expected. And President Trump says he is ordering the Treasury Department to stop minting new pennies because they cost more to make than they're worth. The U.S. Mint lost $85 million over the past year on the nearly 3.2 billion pennies that it produced. It cost nearly 4 cents to make and distribute each coin, partly due to rising prices of zinc and copper. But it's unclear whether the president actually has the power to eliminate the penny, because the size and metal content of coins is dictated by Congress. That's what's happening here in the U.S. Back to you in Mumbai.
Thanks for that. But staying with the Wall Street, let's in fact listen in to Bob Doll, the CEO and CIO of Crossmark Global Investment, and what he has to say on his investment ideas currently.
Value over growth. I think you have to own some of the mega cap stocks, the Mag 7, but I think you should own less today than you owned a year ago, and do some bargain hunting in areas that have lagged. Look how well healthcare's done. Staples will get a run at some point in time. The energy stocks have done well year to date. So it's not the same game as it was last year or the year before.
Okay, that's all the global market action that we have for you all this morning. But how is all that going to be impacting our Indian markets? We have a team of research joining in with us this morning to set you up for trade, tell you which are the important stocks to watch out for, as well as the FNOQs to watch out for. We have Abhishek as well as Sudarshan joining in with us. Good morning, Abhishek and Sudarshan. Before I come to you all, let me start with what is the trade setup looking like for the markets today. Now, obviously, yesterday we saw that the market was slipped for the fourth straight session, longest losing streak in almost 2 months. Nifty Metal Index, that was a top sectoral loser, 3% fall that came in for the Nifty Metal Index, mainly because of the tariffs that were indicated by President Donald Trump, fresh tariffs on imported steel as well as aluminum, causing a bit of a concern. So Nifty Metal we saw yesterday closing with a decline of almost 2.6%. Mid and small cap, that also saw an underperformance coming in and a sharp fall for the Nifty mid cap as well as the small cap in yesterday's trading session. FIIs continues to sell. They have sold almost 2,464 crores in yesterday's session. What we're watching out for today and going to be key is obviously earnings movers. So keep an eye out on that. We have earnings also coming in from Berger, Lupin as well as Sale, and other important companies are going to be there. No Nifty companies today though. Trump tariff, that continues to be a focus. Anything that comes in from President Donald Trump is key to watch out for on the tariff front. Prime Minister Modi's visit, that's going to be important, you know, in France, that we're seeing updates coming in as well as now in the US. So keep an eye out on any updates on that front in terms of trades or any talks on that front is key, as well as FII selling. Is that going to be continuing is a key factor to watch out for. As of now, Nifty implied open is indicating a positive start, but is that going to be sustaining mild positive, right? Just 17 points up is Nifty implied open. What's going to be the outlook going forward, and will that Nifty manage to go past those levels of 23,400 today is key to watch out for. But yes, that's how the market setup is looking like. But which are the important stocks that you should be keeping on your radar today? We have Abhishek for that. Good morning, Abhishek.
Good morning, Vinny. So Hindalco will be in focus. Novelis numbers have come down, which is adjusted EBITDA is down about 19% YOY and 20.5% sequentially. Even the rolled product shipments are down about 4.3% sequentially. So adjusted EBITDA per ton is down 18.5% YOY and 17% sequentially. Eicher Motors numbers have come out. The revenue and PAT is below ARPOL. Apollo Hospitals revenue almost in line with ARPOL. PAT is ahead of ARPOL. ISAF SFB, the annualized slippage ratio continues to remain elevated at about 10.5% for them. So they have, or they are the only lenders to report a net loss in this quarter as well as previous quarter. So net loss momentum continues for them. Grasim revenue is, below ARPOL. However, net loss is also ahead of ARPOL at 169 crore versus 74 crore loss that we were estimating. Ashoka Bilcon, the revenue is down 10%. However, the margins have expanded to 26.8% versus 22.5% on a YOY basis. First Motor revenue is up 11.7% YOY. However, net profit is up 35% YOY. Nalco revenue is up almost 40%, that is 39.3% on a YOY basis, and the margins have more than doubled to 49.9% versus 23.1% in the same quarter last year. Back to you.
Okay, Abhishek, thank you so much for that. But now over to you, Sudarshan. What is the cues that you're picking up this morning in the world of F&O? What are we watching out for there? Good morning.
Good morning, Vinny. So amidst the weakness in market, we saw sensex and Nifty falling for fourth straight day, biggest or longest losing streak that we have seen in last 2 months. But major fall was seen in broader markets. We saw small cap index and mid cap index, both these indices falling more than 2% each. Now for today, GIFT Nifty is indicating a flat start or say with minor gains. Talking about the flows, FIs continue to sell. Yesterday, they have sold more than rupees 2,400 crore in the cash market, while DIs have bought more than rupees 1,500 crore. In the index futures too, FIs have sold more than rupees 1,800 crore, and they have reduced long positions by 1,500 contracts and added short positions by 9,500 contracts. In the index option, they have bought, but again in the stock futures, they have sold around rupees 2,000 crore. With this, FI's long exposure now reduced to 15%, and on the client side, long exposure remains healthy at 72%. On the option front, 23,700 call and 23,400 call have seen healthy additions of shares around 32 lakhs to 34 lakhs. And on the put side, 23,100 put has seen addition of nearly 27 lakh shares, and 23,400 put has seen addition of almost 14 lakh shares. Important levels for Nifty. Support remains around 23,200, that is intraday low of last week, and resistance is now at 23,750, that is also 50-day moving average. Stocks in focus. One stock is Trent. It's trading a very important level. Remember, in July 2024, after Q2 earnings, stock had jumped and had gained almost 7%. So from the level that it had gained, it's trading around those levels. And second is ONGC. I've taken this stock because overnight there's a sharp move in crude. It was up around 2%. That's the reason I've taken ONGC.
Okay, so Darshan, surely we'll keep an eye out on these two important names, Trent as well as ONGC in the world of FNO. But on that note, we're going to slip into a very short break. And after the break, we'll get to the latest from PM Modi's two-day visit to France. Stay tuned for that. Welcome back to Power Breakfast on CNBC TV 18. Now getting you some important updates from Prime Minister Narendra Modi's two-day bilateral visit to France. PM Modi met with the French President, Emmanuel Macron, and attended a dinner hosted by him before heading for discussions. In addition to strengthening bilateral relations, PM Modi's visit to France includes an extensive discussion with Macron on strategic cooperation, innovation, and artificial intelligence. The dinner was attended by other world leaders and business people as well. At the event, PM Modi also met with the US Vice President J.D. Vance for the first time. The Prime Minister's visit to France comes ahead of his trip to the United States on the 13th of February. Moving on, US President Donald Trump's top economic advisor, Kevin Hassett, in an interview to CNBC, has criticized India's tariffs, describing them as enormously high as well as restrictive to imports. Listen in to what he had to say on tariffs overall as well as specifically on India.
Talking specifically about tariffs, just recall that almost every trading partner has much higher tariffs than we do. In fact, the only trading partner that's about where we are, and there's Canada and Mexico who are part of the trade deal, but outside of that, the UK has about the same tariff we do. The EU it's 2 to 3% higher. Taiwan, it's 10 or 11%, and India, and we're meeting Modi soon, has got a lot to talk about with the president because they have tariffs that I think the trade-weighted average is a little bit short of 20. Now I'm running it out of my head, so don't give me a Pinocchio. But they have high rates that are enormously high. They're lockout rates, and so President Trump believes that at the very least everybody should agree that if they're charging us 20, then we should charge them 20, and then if they go down, we'll go down. But that's the idea of reciprocity in the tariff space.
Okay. On that note, we're actually going to slip into a very short break, but don't go anywhere. After the break, we'll get you what's happening in the world of commodities, so stay tuned in. Thanks for staying tuned into Power Breakfast on CNBC TV 18. Now let's move on. The centre's interest-free capex loan offers to state has witnessed a muted response in FY25. In a response to a question in the Parliament, the Finance Ministry said that only 27% of the approved 1.11 lakh crore rupees were spent by the state till 31st of January. Sapna Das is joining in with us now to give us those details. Sapna, what are you picking up here?
Absolutely. 1.22 lakh crore actually was the kind of amount that was approved by the Finance Ministry, out of which 1,10,000 odd crores was actually released to the states. And the numbers are right there before you. Under 30,000 crores of that has been utilized up till 31st Jan, which means that this data is as recent as just barely 10 to 11 days back. Now, with just 2 months remaining for the financial year to be over, I think this is going to be one of those years when the offtake in the state capex loans is going to be at its lowest point. In the last 3 to 4 years, we have not seen this kind of data. Having said that, among the states which have done the maximum utilization, for example, it's Uttar Pradesh. 10,000 odd crores were released, out of which over 50% has been utilized by UP. Rest all the states are really, really lagging behind. The other aspect that we also need to keep in mind is that the amount is actually larger. 1.22 lakh crore is what the government approved. What was released was 1.10 lakh crore, and what was finally utilized by the states is under 30,000 crores. But actually, the pie is 1.50 lakh crore. That number is not really going to be met. Hence, if you look at the revised estimates of the current year's current year's budget, or rather the revised estimates for FY25, a 1 lakh crore cut has come in the overall state capex offtake, the kind of numbers that they're supposed to meet. So this is not a very good sign in the times to come. There are also lots of terms and conditions for the states to utilize a large part of these capex loans. For instance, 95,000 crores is actually tied up, linked to various kinds of reforms that they have to do. Apart from that, utilization certificates have to be given. Then, whatever is the pending interest that has been earned on some of the treasury accounts or other SN accounts, that has to be transferred back into the Consolidated Fund of India. So going forward, we have to wait and watch and see, how this really pans out. It was okay to say that Q1 was very slow in terms of capex because of general elections. That's right. But, these numbers at the state level are telling a different story, which we need to get to the bottom of.
Thank you so much for that, Sapna. But we do have Manisha who's joining with us to tell us what's happening in the world of commodities this morning. Good morning, Manisha.
Good morning, Vinny, and yet another day and another all-time high when it comes to gold prices. Now we are trading above $29.30 an ounce as well. It was just last 1 month that we were trading at around $26.30. So we've seen $300 of a jump up coming in just about a month. Well, there's a lot of safe haven buying because of, one, easing monetary policy, global tariffs from US on aluminum and steel have taken case, and then the central bank buying has been on the stronger side as well. Also, China has been buying gold quite strongly. January is the third straight month where the central bank has continued to buy gold. It's not just gold. When you look at the silver prices, they are trading at a 4-month highs as well. You had crude prices gaining by 1.5% in the overnight markets as U.S. threatens to sanction individuals and tankers transporting Iran crude to China. And tariffs continue to weigh as well. So when you look at the markets, well, it's slightly jittery and the safe havens absolutely seem to be doing quite well.
Okay, Manisha, thank you so much for that. But with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, Bazaar Morning Call.